What would you do if your retirement savings dropped by six figures overnight? That's exactly what happened to David, a retired aerospace engineer from San Diego. He watched his 401k lose $178,000 in under 2 weeks last year, and the worst part? He did everything right. He followed the rules, but the market changed, and no one warned him. And here's the kicker: that financial freefall was before this latest round of inflation data and rate hike rumors hit the headlines. Today, we're breaking down Gold IRA tips specifically for retired professionals, engineers, doctors, corporate VPs, anyone who's built a substantial retirement and wants to protect it. Because if you've saved over $100,000 in a traditional IRA or 401k, you have to hear what's coming next. Now, if you're paying attention to the economy right now, you know this isn't fear-mongering. It's fact. The Dow just had its worst quarter since 2020. Inflation is creeping back up after the Fed's pause. And banks? Still quietly failing. Did you catch the headlines on that regional bank in Texas last week? This economic environment isn't stable. And yet, your entire life's work, your retirement, might still be sitting in the most vulnerable place, the stock market. That's where David's story turns. After watching his retirement drop by nearly $200,000, he took a step that many professionals never even consider. He rolled over just $512,380 of his traditional IRA into a self-directed Gold IRA. He did it after getting a free Gold IRA guide and taking a 15-minute, no-pressure educational call to understand how it worked. No pushy sales pitch, no free silver gimmicks, just the truth about what Gold IRAs can actually do. Fast forward to today, he sleeps easier. Not because gold is magical, but because he diversified into something real, something tangible, something timeless. So let's walk through 3 smart, lesser-known Gold IRA tips for retired professionals, especially if you've worked decades to get where you are. Tip number 1, don't wait for the crash to act. Most professionals I speak to say the same thing. I'll move money if things get worse, but by the time it feels urgent, it's usually too late. The smartest move is the proactive one. That's how David avoided another 6-figure loss when things dipped again this year. Tip number 2, use a partial rollover. You don't need to move everything. That's the beauty of it. A partial rollover lets you hedge without overcommitting. Most high net worth retirees I work with start with $150,000 to $500,000. That keeps you flexible while adding protection. Tip number 3, vet your Gold IRA company like you'd vet a surgeon. Your retirement isn't something to experiment with. You want a provider that puts education first. No pressure, no fear tactics, no hidden fees. That's why we created a free guide plus a one-on-one call to walk you through how this works in plain English and help you see if it's even a good fit for your situation. Look, retirement should be the reward after decades of work, not a roller coaster. If you've built a career, a family, a legacy, don't let market volatility take that away from you. It all starts with a simple, free step. Get the Gold IRA guide and book a quick, no-pressure call to explore your options. It's just a conversation, but it could be the most important one you've had this year. David's story started with that free guide. So can yours. You've worked too hard to leave your future to chance. Protect what you've built. Secure your legacy. Click the link and let's talk.